Friday the 21st of August, 2026, and XRP is posting its strongest week in months. In the last 24 hours the token jumped nearly 19% to touch $1.24, and it is up around 30% across the week. But this move is not a broad crypto bounce. It is being driven by Ripple putting institutional credit behind its Rlusd stablecoin. A price spike plus a new lending fund is exactly the combination that separates a short-term pump from an attempt at lasting utility. Ripple is backing a new institutional credit fund with Clearpool and Cicada Partners. The product will lend Rlusd, Ripple's dollar-pegged stablecoin, to fintech and payments companies operating on the XRP Ledger. This is wholesale credit for businesses, not retail lending. Separately, Ripple has minted an additional 900,000 Rlusd tokens during the rally, a deliberate supply expansion. On the consumer side, Gemini launched an XRP credit card with 4% rewards on the 13th of August, and Ripple has a pilot with Mastercard and WebBank for credit card settlement using Rlusd on the XRP Ledger. Stablecoin lending turns Rlusd from a trading tool into a productive asset. When institutions lend Rlusd, they need XRP Ledger infrastructure for settlement, collateral and repayment flows. That means transaction volume can grow even if speculative trading cools. It also helps explain why XRP is holding up better than many altcoins this week. The market is starting to price XRP as a network that could generate fees from real credit activity, not just exchange volume. The gap between ambition and scale is still wide though. One figure this week suggests a $1.2 billion cash, equity and XRP deal is about 4 times Rlusd's entire market capitalization, so execution risk is high. In the near term, the key signal is not the XRP price, it is whether the credit pools actually fill. Watch Clearpool's pool utilization rates, the frequency and size of new Rlusd minting, and confirmation that the XRP Ledger features underpinning the lending are fully live. If those metrics rise alongside price, the rally has a real foundation. If price climbs while stablecoin supply stays flat, the market is running on narrative. ETF inflows are another tailwind, but the more important test is whether this lending pilot turns into recurring on-chain activity. So the takeaway is simple. Ripple is not just defending XRP's price, it is building the plumbing for a stablecoin credit market on the XRP Ledger. That is rare in crypto, where most rallies are driven by leverage. If the credit fund works, XRP could become a collateral asset and settlement rail, not just a token to trade. If it stalls, expect volatility. Watch Rlusd supply and lending pool data as your early warning system. For now, this is the most credible reason to treat XRP's best week in months as more than noise.